Mary Barra, CEO of General Motors, GM, recently stated that she is confident they will catch up to Tesla by 2025. This is because, according to her, consumers are amazed when they experience their vehicles. GM, the market leader, aims to have 35% of its fleet electrified by 2025. We are already the runner-up in sales in this segment in the United States. We have surpassed Ford, and very soon, we will celebrate this triumph, said Mary Barra. The CEO also projected that their electric vehicles will be profitable by 2025, sparking optimism among investors envisioning profits comparable to those achieved by Tesla. However, the CEO surprised everyone with a new statement. What did she say? Follow along as we reveal the details of this impactful declaration by Barra, where she openly acknowledges Tesla's achievements. Chapter 1: GM's Growth. General Motors, GM, aims to lead the electric vehicle (EV) market in North America. Substantial investments have been made by the company, resulting in a temporary decrease in capital. Nevertheless, last year, GM announced positive expectations. They project that, by 2025, the EV division will become profitable. This news came to light in a meeting with investors in Manhattan, where the company outlined strategies for this financial turnaround. With ambitious goals, GM intends to sell 1 million EVs annually starting in 2025. The commitment was emphasized at the event, showcasing various electric models. Among them, the Cadillac Celestiq Fastback, priced at $300,000 and unveiled in October 2020, stood out. However, such an aspiration is not simple. For example, Tesla took over a decade to achieve similar numbers. Still, GM's leadership appears confident in the realization of these plans. Several strategic measures were proposed to support GM's ambition. One of them is the construction of at least 5 battery factories in North America. The idea is to increase production to meet demand and secure batteries steadily. Obtaining essential raw materials such as lithium, cobalt, and nickel is also a priority, as they are indispensable in the manufacturing of EV batteries. Once a solid supply chain is established, GM plans to prevent delays and meet production expectations. Recognizing changes in consumer habits, GM also aims to innovate in digital retail. The intention is to use online platforms to boost demand for EVs. Achieving these ambitious goals of GM requires considerable effort, dedication, and strategic planning. Challenges have been acknowledged by GM CEO, Mary Barra. She indicated that EVs priced between $30,000 and $40,000 may not generate profits before the end of this decade. Barra acknowledged that, at present, Tesla is a leader in EV technology, profitability, and scale. However, she maintains an optimistic view of GM's future in the sector. Ongoing strategies, such as battery factories and the quest for raw materials, aim to close the gap with competitors. However, the high cost of batteries is an obstacle to profitable mass production in the mentioned price range. Barra is hopeful that technological advancements and economies of scale will help reduce costs and, over time, balance the prices of EVs and conventional vehicles with combustion engines. Mary Barra's observations, though realistic, may not be definitive. Tesla has already demonstrated profitability in the mid-sized electric vehicle (EV) segment with its Model 3, priced at approximately $37,000 before incentives. Even without disclosing the exact margin, Tesla has shown favorable financial results, suggesting a profit margin in Model 3 sales. If Tesla achieved profitability in this segment, the question remains, why couldn't GM, among other automakers, achieve the same success? Chapter 2: Solid-State Batteries. Exploring new routes in battery technology could be advantageous for General Motors. The cost of batteries significantly influences the final production cost of electric cars. Tesla has made significant strides in this area, with improvements in technology and manufacturing, enabling it to reduce the prices of its vehicles. By reconsidering the origin and manufacturing of its batteries, GM can benefit from technological progress and, consequently, reduce expenses. Focusing on battery research could lead to the development of technologies with higher energy density and autonomy, along with reduced costs. Solid-state batteries, an emerging innovation, could be a revolution, offering greater efficiency and performance. Gotion, a pioneering Chinese battery manufacturer, created the lithium manganese iron phosphate (LMFP) battery, brimming with new possibilities for electric vehicles. Batteries using manganese have several advantages over those using cobalt, notably the increase in energy density. This means electric cars can travel longer distances on a single charge, reducing the range anxiety that potential consumers may feel. LMFP batteries have already demonstrated their capabilities, powering a vehicle for 1,000 kilometers on a single charge. This achievement is a remarkable leap beyond the current industry standard and highlights manganese's potential to extend the range of electric cars. The ability to cover long distances without recharging is crucial for the acceptance of electric vehicles. Gotion's battery technology could be decisive for greater acceptance of these vehicles. This would give drivers new confidence for extensive journeys without the worry of stopping to charge, making the experience of owning an electric car much more convenient and practical. Chapter 3: The Cost. The economic efficiency of manganese batteries is a favorable point. Cobalt, which is quite expensive in conventional batteries, if reduced or eliminated, can decrease manufacturing costs. This would make electric vehicles more affordable and accessible to various consumers. Currently, General Motors, GM, does not need to focus on EVs below $40,000. It can broaden its vision to the entire automotive sector. Inflation has raised car prices, with the average cost of a new vehicle surpassing $48,000. In this scenario, GM could target higher-end EVs, even if initially priced above the $40,000 initially considered. By offering EVs in this range, where profit is more tangible, the company can solidify its finances. Higher prices bring more robust profits, balancing the investments in the development and scale of these vehicles. High-quality EVs in this price segment cater to customers willing to invest more in a superior product. Profiting from more expensive EVs can financially strengthen GM. Thus, the company would be able to invest in more research and production of EVs, covering different price levels. In summary, GM faces a remarkable opportunity to profit in the EV sector. By changing its strategy regarding batteries and sales, focusing on higher profit margins, the company would undoubtedly stand out in the market. With cutting-edge technology and optimized production processes, GM could become a formidable competitor. Challenges regarding costs and access may arise, but the company is determined to make EVs profitable. This commitment is a promise of lasting success. With this revised strategy, GM is moving toward financial stability and growth. This would include more investments in research and development, as well as expanding its EV lineup. And what about you? What do you think? Share your opinion here in the comments.